about my trading position. This is a long time ago, and we've done this in classroom before, guys. But it reminded me that I haven't covered it so far in this classroom, and we'll obviously cover that this evening when we sit down to the main classroom, and when we maybe do 4 o'clock as well. And he said it's just about where you buy the market or where you sell the market. He says, and he says at first I was always struggling, and he says I remember the conversation when you were talking to us about well, why are you struggling? And I would point out these trades. And what I said at that time was, well, guess what? You're buying in the wrong location. And he tried to get his head round that concept. He says, I don't understand what you mean. I'm buying in the wrong location. I've got value. You keep telling me to buy value. And he says, well, and when I looked back at the charts, this is a great example of it from the London session here on the S&P. We can see we've got value to the upside, and I would say, well, where would your buy trade be? And he says, right, I would put in a buy order here. I don't want to miss the trade. I want to make sure I'm in the trade, and that's all very good when you're an institutional trader and you're building a size, but it's not so good if you're a retail trader and you're not trying to build a size around a certain position. So one of the key aspects to this is, he says the problem is, I used to always get stopped out. And when you explained what you do about that, he says, it became dead obvious what I needed to do. Instead of buying at that pink line, he says, all I did was I started to put my buy order here instead. Because what I said to him was, buy where your stop's going to be for that original buy trade. Just put a buy order in where your stop is going to be for your original buy trade, he says. So I put my buy limit in there, cancel that trade there, and I sit and I wait. I sit and I wait. I don't chase. I don't go after it. If I get my price, I'm in the trade. So this is obviously something we've covered in classroom years ago. It's called the pro trade. It's called the pro trade. Okay. So sit and wait, and what happens? The price trades down into your buy order right there. Trades into your buy order. You get filled, and the price breaks north, and it gives you a beautiful profit, almost with very, very limited drawdown on these types of trades. So he says, so in future, what I've been doing from that is, anytime I see a market that's then gone bid, then what I'm going to be doing when the market's gone bid, I'm going to automatically assume that the buyer that came in at the bottom tick, so if that's the buyer that came in at the bottom tick, where is their stop? Where is it? Well, if we just, instead of drawing these pink lines so it confuses everybody, I'll just draw a little shaded box, okay? That's where your buy entry is. So if that's where the guy finally bought the price, where's everybody's stop? Well, everybody's stop is in this box here, isn't it? So that's where you're going to buy the next time. What happens? The price trades down into that box right there. There it is. There's your buy order right there. There was your original buy order here. There's your next buy order right there. And what happens? The price goes immediately in your favor. And what are you going to do now? Well, you've now got a new lower price, and you say, well, if I'm still bullish, and I am still bullish, I'm just going to draw a line again from where that buy order came in. So what are you going to do that for? Well, because I'm going to draw another buy box in here, and I'm going to try again. If I get basically scratched out of this trade, I'm going to try again. And what happens? The price comes into that box, you buy again, and you're back in the same trade again. And now the price makes the big break north. And you can see that you ended up with a sensational trade that took 3 attempts. This one was profitable, this one was profitable, and this one was very profitable from 3 attempts. 3 attempts. And this is just what we called the pro trade. Several years ago, we called this the pro trade, because this is what we teach the professional traders to do. This is what we've been teaching the professional traders to do for 40 years. This is what I got taught to do when I sat down at my desk. This is the first thing that I got taught. It's not my idea. Of course, it's not anybody's idea. It's probably been done since the beginning of time. But the point is, this is what we buy lower lows. Why do we buy lower lows? Because there's two things. Number one, there's always liquidity. Number two, we're trying to get as average a price as low as possible with liquidity. So we're buying at our price, and we're not buying. We just refuse to buy, Andy, at somebody else's price. We refuse to buy at somebody else's price. We're only buying at our price, or we're not buying at all, right? But we're not just buying at our price. If the one thing you'll probably recognize is on each of those pins, what do you actually see happening? A surge in volume, a surge in volume, and a surge in volume. Do you get it? So when you're seeing those trades, you're getting those surges in volume. Now, as a commercial trader, you're not waiting for that. That's madness to think that a commercial trader is waiting for a stop run before they do any trades at all. That's not true. I never wait for a stop run. But retail traders, this is a difference. If you're not prepared, if you're sitting there saying, yeah, I thought you said that you buy before the stop run. Yeah, because I'm trying to get maybe 500 contracts in here, Andy. I'm trying to get 500 contracts in here, Andrew. I'm trying to get 500 contracts in here, everybody. You know, I'm not trying to get a 10 lot at the bottom edge. But for retail traders, you've got to start thinking about where the best trade with the highest probability is. So Andy, it's exactly the same, right? It's waiting on the corporation bus. You know, you're trying to get a response, and then two Andys come along at the same time, and I'm left confused. You know what I mean? So anytime we see these elements, if you're trying to think about where a trade is, just think about where the last buyer was. Think about where the last seller was, and just put your trade according to that as an exercise just for a day or two, guys. Obviously, Sunday's not going to be very good, or Saturday's not going to be very good, but you know, if I look at this, for example, and I say, right, I'm bullish this market, right? I'm bullish this market overall. I can see it's pulled back, right? So where's your trade going to be? Well, the last buyer was at this price, so I'm going to put my buy limit 1 tick below that price and 4 ticks below that price. Okay, so you've got two trades. So that's where I'm going to put my buy limits. And obviously, when the price trades into that box, you get filled, and you instantly make a profit from the trade, right? So you say, right, I'm going to go again because I can see exactly the same here. So you go and say, right, well, I'm going to do 1 tick through that price limit. So that's going to be a price there at 25s. And I'm going to do 4 ticks through the price limit. So you're going to do 16.5, right? So you're going to put your second buy order at 16.5. On this occasion, your second buy order gets filled right there at the bottom tick price. On that occasion, you get the bottom tick on that one, on two contracts. And obviously that trade also makes money on both contracts. And then so on and so on. What happens if you wanted to buy this one? Well, where was the last buy order? Well, you could count it as the bottom edge here, or you could obviously see that we've had a good rotation. You might count it as that price. So you're going to go from the price of 17.5 down to the price of 16.5, and you're going to say, there's my buy box there. And you're going to structure your trades according to that buy box, right? You're just going to structure it according to what you can see developing. It's up to you how deep you want to get. Every market's going to be different, of course. And again, another profitable trade. Into the bottom edge, you can see that this still makes a lot of sense. I can see the last buyer came in at this price here. So on the basis that that's the last buyer coming in at that price, what am I going to do? I'm going to take a buy box and I'm going to stretch up into that buy box. At that stage, there's my buy trade right there. And obviously that's where the value is pointing straight north. And you can see I've taken a few different trades at a few different prices. And what happens? Well, that's obviously the CPI numbers trade right there. And that was obviously the CPI number. And we got this incredible explosion of value in that trade. And you can see in the background that these are This is how we've traded this morning. We've been basically buying, for me personally, I've been basically buying everything below that line on the S&P. Basically buying everything below that line on the S&P this morning, and it's worked out obviously amazingly well for us. So we've had a very, very good day, guys. A very good day, guys. Beautiful.